Welcome to the Dividend Talk podcast, episode 241, quarter one 2025, dividend portfolio performance. Hey, European DJI. How are you, buddy?
I'm good. I'm good. It's Friday and the first quarter has ended. So, um, you know, today this shows all about our quarter one performance results, tariffs. Um, but it's always a nice part of it because at least 3, 4 times a year we spend some time in looking how it's going, and it's sometimes like watching paint dry, but it's really nice. And for all, spring has started. I mean, the weather is becoming so beautiful. It's awesome. So for me, it's already like I want to work in the garden. I want to do this. I start thinking about vacation and everything. Probably the prices for vacation, they are now at max price, like peak pricing, because they know how human beings are at this moment in the year. So, but it's life is good. Life is good.
Yeah, we've actually had a nice week this week in Ireland, but well, most of the week has been nice. It's been raining a little bit too, but springtime is always good. But I actually like talking about our portfolios. There's a lot of craziness going on in the world, and we could talk about tariffs in the news of the week, but we have got a ton of questions about tariffs. So let's keep that on the D-low for the moment, and we'll get into some questions on that. But what about news of the week? What's been going on in the world other than tariffs?
Well, I just want to call out that we've been making a lot of noise on Twitter around Charles Schwab,
Yep.
because SCHD, the ETF, of course, had an amazing dividend hike again, and it is so frustrating. I mean, it's not that I need it in my portfolio that much. It's just frustrating that we can't get access to it. If I would have it available, I will probably have some in my portfolio. So it made a lot of noise, really a lot of noise. And it took Charles Schwab on Twitter 3 days to respond. Also, Ian Loppuch chimed in. He also put something on there because Jurien, I believe, one of our members on Facebook, also put a comment below his video saying like, hey, help us, buddy. But you know what they answered, Schwab, after 3 days? 3 days,
I
and you need to think, yeah, it's in total more than 400 likes, 50 or 60 reposts, 50, 60,000, how is it, views, like in 2 days or something like that. So it's a lot, yeah, for to get exposed as a company like that. But they said, hello, we are closely monitoring the opportunity to offer these ETFs aligned with EU UCIT structure to investors in Europe, but have no plans to share at this time. We appreciate your interest, and we will share updates as they become available. Oh my God, that's a fuck off answer, right?
Yeah, it's corporate bullshit. During you're sitting in a meeting with all like senior leadership or those above you, and they want to tell you that you're doing a really bad job.
Yeah.
They say it like politely. That's basically what they've done.
But we're
Leave-
closely monitoring the opportunity. I mean, monitoring the opportunity. Which business person monitors an opportunity? No, you take the opportunity, you double down, but closely monitoring the opportunity. That is as passive as it can get.
I saw your reply as well. Very Dutch. I might ask you, but you basically told them that it didn't make any sense what they said.
No, because it doesn't. I'm too analytical for this stuff, but I try to dissect what they are saying. But I think it's just a fuck off. I would like to just tell it that they tell me straight in the face. That's what I know what I'm up to. Now they say like we will share updates as they become available. So I will just every month I will put a reminder in my calendar to every month remind them about it, whether the updates are coming and whether the closely monitoring of the opportunity had any effect so far. Yeah, because how long do you want to monitor? I imagine there's sitting a bloke there just like 24 hours a day watching at a dashboard until it maybe changes color, or I don't know how that works, closely working monitoring the opportunity.
Yeah, but I mean, is the cost of making this key investor document, because that's all we need.
Yeah.
Is the cost of this outweighing the benefits of having such a fund in Europe. It couldn't. It could not be. Like, surely there's.
No. But Vanguard has ETFs and everything. So and maybe they don't have a legal presence in a country in Europe. Well, you just get a post office box, find a lawyer that wants to host it, and
Yeah.
I mean, for such a company, it's bad. You know, I really hope that maybe Van Eck or someone like that will take on the opportunity. I don't know if there's a patent on this on this index that's below it, but I just hope that a competition steps in, and Van Eck will be an amazing candidate.
Yeah, yeah. And Joris asked an interesting question. So, if your promotional work eventually gets this fund into Europe, what would your approach be into buying it?
I think I would indeed buy some. I could imagine it being a part of an anchor position in my portfolio. And why? I think that this ETF is fundamentally set up well because it's a combination of value and dividends.
Yeah.
What I mean to say is, like, the rotation every half a year effectively kicks out all the overvalued stocks and brings in all the undervalued stocks, but they still look at a few fundamentals there for, you know, that they also don't select the companies, I don't know, with a poor balance sheet or something like that. Yeah. So there are some basic selection criteria in there. Now, then you can argue, like, why don't you build it yourself? First of all, I cannot do it in a tax efficient way to every time throw out my winners and buy undervalued ones. And yeah, it would require too much maintenance from me, and the discipline kind of is here then outsourced to a company like Schwab. So I could imagine it to be, I don't know, 10-15% of my portfolio, something like that, as an anchor. Here.
Easily. And what I probably end up doing is any company I've owned that's in this fund, I would no longer buy that company because it's within the fund, and maybe
but only for that half year.
Yeah, exactly. When it reconstitutes, we can see. But yeah, I would definitely have it maybe 20-25% of my portfolio. It would be a nice foundation, and then I could focus a lot more on European companies rather than US companies.
Yeah, exactly.
Nice. So quarter one this year.
How was it for you?
2025.
How was it for you? And that means until last Monday, not all the fireworks after it.
Yes. I mean, if we had this conversation last week, it might have been a little bit different in terms of what your portfolio value is now. But I mean, I try and not look at the portfolio value overall. If I'm honest, getting past that 100K mark was a big milestone. It quickly jumped up past that, and I'm sitting comfortably above that right now, even after the downfall. So I'm quite happy about that. But we're here for dividends. So dividends is what matters. And in quarter one 2024, I earned €910 in dividend income. Okay, that was 2024.
Nice.
This year, it is at just under €1,200.
Wow.
Is what I've earned. So it's just about a 20% gain year over year in dividends, which was quite good. March last year was a little bit weak for me. I had a lot more in March this year, so that's where I probably made up most of the gains. But yeah, I'm quite happy with that. I mean, I expect that to level out over the year. It's not going to be 20% year over year because the portfolio gets a little bit bigger. But I have a lot of high yield in my portfolio. A lot of companies had nice dividend hikes. BAM, NN Group, ASR. I've had a lot of double-digit hikes. Munch own machine have double-digit dividend hikes. So I'm actually quite satisfied with my portfolio. Made some buys as well. Not as much, actually. Well, I wouldn't say not as much. I've limited the amount of companies that I've been buying. So it's literally only one, maybe two per month. ASR, I've bought some Legal and General. I had a video on that. I bought some Realty Income. Had a video on that. Glambia dropped. So I did a deep dive in them last year, and I had set a price around €10 for them. They dropped close to that, so I bought some Glambia, and I bought a couple of investment trusts. I also bought BAE Systems. So yeah, added a lot of UK stocks, I have to say. I'm actually getting overweight in UK stocks, but they just seem so undervalued at the moment. UK is struggling with their economy, I have to say. But yeah, they've been my boys. But I think overall it's been quite a steady month.
Yeah.
Yeah.
How do you feel about Iberdrola?
Iberdrola, I like Iberdrola. I've been, do you know what? They're still trading above what I had as fair value. So I keep, like you can see, I'm buying
Yeah.
maybe 5, 10 shares at a time. So when I make a big purchase, if I have money left over, I normally buy Iberdrola because I'm doing that. But I really like them. The whole hydrogen aspect really appeals to me.
Yeah.
And I'm a big fan of renewable energy, even though it's a tough area. We can see that with the renewables in the UK. UK wind is probably one of my worst performing companies year to date. I expected them to do better under a Labour government. They've done worse. So renewables is a tough business at the moment, but Iberdrola with hydrogen, I really like, and their presence across Europe is good as well. I did a deep dive on Red Electrica, which surprised me a little bit, and they were comparable to Iberdrola, but obviously the dividend is a bit more safer with Iberdrola. But yeah, renewables is something that I'm really keen on, and hydrogen I believe is part of the future. So I'm bullish on Iberdrola, and they're doing quite well in this down market. They're holding up quite well.
Definitely.
So overall, it's been a bit of a steady month for me. What I'm struggling with is you can see that I've invested not a little bit less, so I'm still sticking to my minimum threshold of what I'm investing. But for the last couple of, I'd say maybe year, I've been always above my threshold. But we're now talking about extending the house or buying a new house. So I'm starting to keep some cash aside because it's conscious in my mind. So I think I spoke about that last quarter, the quarter before. Happy wife, happy life is what they say, and there's some compromises. So there's a big year ahead in terms of what we decide to do. Are we going to extend the house because that's going to cost money? We have to fund that somehow. But I've always said, no matter what we do, my foundation will stay the same. So whatever I invest automatically will stay the same. But yeah, I mean, I'm up around 18% of my paddy, which is
Nice.
Which is good. But with inflation, that could be down around 12%. With the
But
way
is it
inflation
18% compared to last quarter?
last quarter was at 16%, so I'm at 18% of my total total goal, which is not too bad. But yeah, overall quite nice. I'm looking forward to quarter two, I have to say, because that's when all the big guns come in for us Europeans. So my biggest month was just over 1,000, and I think I'm going to break that. I think I might hit 15,000 or 1,500 in 1 month. So let's see. I'm looking forward to quarter two. That's when the fireworks pop off.
Awesome. So, and you're still having this body percentage as part of your income, not your expense ratio, right?
My paddy is in terms of my income. Yes.
Yeah. Okay, good. Okay, so for me, I mean, I've been on a buying spree actually before all this shit happened with tariffs. But there's a reason for it. I sold, I think, a third of my Apple position. I did it, I think, on in one of the first days of January. So I had a lot of cash to deploy. And I also disposed of my last 3M shares at $145, $146, still like cleaning up my portfolio. I've got a few of those stocks in my portfolio, so I really hope to get them out. Now spring cleaning comes up, so I've got a really good moment again to do this.
Yeah.
But I'll just start what I was buying. I bought Hershey in this quarter. I bought Lyondell Basel. I bought Sila Realty Trust. I bought Cracks PLC, Target, Greencoat UK Wind, Chesnara, Iberdrola, a bit of HPQ, Nike, Novo Nordisk, and a bit of Evolution AB. So I've been buying a lot. If I'm looking at it, a lot European again, but I would say 50-50 probably. You see, I'm a bit all over the place with this, and it helps me nicely diversified. Also here, it was a bit of a mix of high yield and a bit more companies that are considered growth or a little bit more defensive. So I mean, I often get this question about diversification, but I think in the first quarter, even though we were getting to all-time highs in the stock market, I still saw just a lot of opportunity out there, right?
Yeah.
So yeah, if you look at my net dividend income growth compared to last year, quarter one, I grew on average my dividend by 13%. You need to know that quarter one is typically one of my poorest quarters in terms of dividend income. But yeah, it grew by 13%. So January was -10, actually. I don't know why, probably like one paid on 31st, the year before.
Yeah.
February almost 18% and March 17% up. My portfolio yield at the end of the quarter was 3.79%, so 3.8, slightly increased. My portfolio grew by 6% since 31 December, quarter over quarter. That was, of course, including net deployments, so including new cash deployed to it. So I think otherwise it would have been probably, well, not flat, but 2-3% growth. My largest sector now is consumer staples with nearly 20%. It was IT, but now due to the sale of Apple, which was quite a chunk, IT dropped to 13 or 14%.
Okay.
SHEL continues to be my largest holding with 6%. It may not take long anymore with the price drop. Have you seen that? It was 35 or 34 in the beginning of the week and now 29 or 28. And I want to remind you, 29, if you take into consideration that they bought back more than 22% of shares, yeah, the 29 today is probably more or less the 23 to 24 like 3 years ago. Yeah, so because it's what share buybacks does.
Yeah. Yeah.
So if it drops maybe to 25, it becomes very interesting again. Yeah,
Oh,
because
wow.
we need to take really the share buybacks into consideration. They will do another 40% of share buybacks potentially, and at these prices, they could be able to make it, right, depending on how oil holds up. Yeah, so that's an interesting. I own so much Shell, so I can't really extend my position. But for anyone looking at it, we got the question a lot about oil and gas last year. But I would say now is the only moment again that I start to slowly wake up out of this deep 2-year winter sleep when it comes to oil and gas stocks.
Yeah.
Yeah.
That'd be interesting. All right, you'll have to practice your discipline if it drops that
Yeah.
low. I hope it does. I will buy more, but you've bought quite a. I'm not used to seeing you buy this much in a quarter. And usually,
Yeah, because I had the cash coming
two
available
sales.
from Apple.
Two sales. And what are your thoughts on Greencoat UK? It's a bit of a tough one, I'd say.
Why?
With what's going on in the UK, I mean, since we bought them, they've been doing nothing but dropping in price. We know they're inflation based. They've had to offload some assets.
Yeah.
So, you comfortable? Happy enough?
Yes, I am. It's also a small position, so this is not a stock that I will be worried about. Look, I'm now at 76% expense coverage ratio, which is for me the financial freedom target. So I hope that maybe after the summer, maybe by Q3, that I can claim the 80% badge on Facebook.
Oh, wow. That would be cool.
Yeah, that would be really cool, right? It should be possible. If I don't buy too many low yielders and no dividend cuts, it should be possible. It should be possible. It's my goal. Get me over 80% by Q3.
Yeah, well, look, you can get Nike at over 3% yield now.
Not yet, because it ran up again today, but yeah, it's getting there. I mean, HPQ as well, right? Oh man, what a drop, right? It's like we'll get soon to it with the tariffs, but oh my god.
Yeah, we'll talk about tariffs later. But
No, but
overall,
it's just nice to see how my portfolio continues to develop, and it is what they say, right? Just discipline, buying income, dollar cost averaging as much as you can, touching your portfolio as little as possible. I sold Apple at 240 something, so I feel like I feel like a stock market hero with that one, but I wanted to sell more, so from that gives me then again a bad taste a little bit. Yeah, but overall, I'm very satisfied with how Q1 did for me. My dividend income grew nicely again by 7.5%, my buddy, compared to 31 December. So yeah, I'm
yeah,
happy
yeah.
person.
I'm glad to see you got rid of 3M eventually. You don't need that in your portfolio.
Yeah, I sold already most of it. These were just the last few that I still had left in there. So, but I made a profit still on 3M, I believe, overall.
Oh, good, good.
Yeah.
Probably one of the few. Depending on when you bought them, of course, but depending
Yeah.
on when you bought them. But nice overall. I think start of the year. I think Europeans next quarter there'll be more fireworks. We might be a bit more excited when we see all
Yeah.
that income coming in, because I'm like you. Q1 is usually quite slow to get going, but 2 good quarters, I would say. And one thing I say is I'm a little bit behind you on my journey, but this strategy works. It just works, and you can see that. You can see that in the numbers.
Yeah.
You can see your graph. You can see my graph. If you take it back to where you are, it's quite similar in terms of percentages. So it's easy for me. I just have to look where you are and just see in 5 years' time, that's where I'm going to be.
Yeah. But it's the discipline, right? It's the
Yeah.
discipline that's key. And getting through the boring middle. Yeah. Hey, let's start talking about tariffs. I think that's what everyone's waiting for when we look at
Yes.
the questions. But before we go there, we have a great community, and I want to call out Billy Pritchard, because he made a really nice comment so what I didn't know, he's teaching students economy at high school, and he has kind of a side project with them, which is all about learning about to read the 3 financial statements.
Brilliant.
Yeah. I mean, how many teachers exist like that in the world? So first of all, kudos, Billy, that you're doing this. And he said, like, I guess on the day yesterday or something like that, they were kind of freaked out about the noise on the stock market. And then he said, like, he asked them the question, okay, but guys, and what he said, he was reminded by what I always say, it's not a stock market, it's a market of stocks. So he kind of shared that message also with his students. And they said, like, so if it's a market of stocks, which stocks would do well? And then they came up with a list of, I don't know, 10 stocks, and 8 or 9 were all up on the day. So he was a really proud teacher. And I just want to give the call out, because you and I know, based in Europe here, and I believe he's in the US, based in Europe here, like how tough it is to be a teacher nowadays. Yeah, the income is something they all the time squeeze on, but the workload is tremendous. Then you have the parents, which I'm also, they all think they know it better than the teacher. There's little respect. So Billy, you're doing God's work. Thank you for that. And I think there must be in your class a few kids out there that will be financially free when they're 45, and they will remember your classes.
I mean,
thank you for it.
It's incredible. What you're doing for those kids is potentially life-changing. I would say, and if even one takes it on board,
Exactly.
it's incredible. Yeah, I wish we had teachers when I was younger willing to do this, but then I don't know if I would have actually stayed back to
I wouldn't.
interest.
I was only interested in the other gender.
Yeah, and football. That's
And
probably
football.
yeah.
Exactly. Those two. Yeah.
So unless my economics teacher was running around after me on the football pitch screaming at me,
Exactly.
I wouldn't have listened.
Yeah. Before when you were dribbling with the ball to the goal. Hey, Derek, remember about your dividends.
Debt to equity.
What?
Anyway, Kim, let's start with Kim's question. The no-brainer question, of course. How do you navigate tariffs and the accompanying stock market sell-offs?
Well, for me, it's a very boring answer. Like we always do. Once we get our salary in, we buy some stocks.
Yeah. But you had a tweet, if I remember, because I haven't been too active on social media, but I've seen your tweet, and it was a little bit more specific. You had 3 or 4 points.
Yeah.
And one was stay away from the black zone. I believe.
Ah, yes, yes. So stay away from the blast zone. So what I mean with that is in 2008, the blast zone, the banks. In COVID, with the blast zone, airlines, cruise ships, restaurants. Now, I would say the blast zone is really about companies with relatively low margins that are very margin sensitive and that have very much an integrated supply chain all over the world. That's why I think you see HPQ, like HP Inc., being going by 30 or 40% down. That's why you see Apple struggling, yeah, because to build one Apple iPhone, I think those are all in the blast zone. And the good news about Nike, for instance, again, was today why it popped up again is because Vietnam seems to be wanting to go on the negotiation table. So if you talk about how to navigate tariffs, I think we need to kind of understand what Trump is doing. He wants a fair trade,
Yeah.
not free trade, but he wants fair trade, whatever he thinks is fair.
Yes.
And I think for him, fair probably means is that other countries start to do something, move to that benefits America. So if Vietnam is one of those countries that will do it, then Nike will probably do a little bit better. But again, when the stock prices are falling so much, you don't need to be a stock market hero. Yeah, you don't know if it will be next week 10% down again. So yes, deploy some cash if you want it, but don't, I would say, like, stick to your rules, whatever your rules are. But my rules is not rush into a stock, as an example. Don't buy all the way when it's dropping. I mean, you can buy something, of course, because it's also a little bit of dopamine. You buy a little bit, but I would say, like, don't run to the bank now and put a double mortgage on your house and think like throw everything in Nike now. I mean, look, if you want to do it, if you get happy from it, by all means, but I'm not sure if that's the best path to wealth. Yeah, so that's what but yeah, to just say, like, with Nike, once a country, for instance, that are under those tariffs are getting on good terms with the US, your stocks may release a little bit from that again. And it's like a falling knife. You don't catch a falling knife. You let the knife fall into the floor, and it hit the floor if it starts like rippling after that.
Yeah.
And yeah, there may be a V-shaped recovery. Okay, then you missed out bottom fishing this 1 week in the last 10 years of investing. It will not do a lot to your portfolio.
Yeah, I think that's a nice bridge then to Andreas's question about the true effect of tariffs will only start to show in the next
Exactly.
couple of quarters. So right now it's a bit of a gamble, and I agree with that wholeheartedly. Some companies, say like Target, might have a bit of a question mark around them at the moment, but he's asking, will you take some reevaluations of your portfolio, and what steps will you take? Or do you treat this more as a temporary price headwind, would you say?
Yeah, I treat it like that. Temporary price headwinds. However, I will, of course, pay really close attention to quarterly earnings that are now starting. And we will not see it in the earnings yet, but we will see whether guidance is going to be adjusted downwards or not. And then it's all about reassessing the dividend safety. Yeah, I expect for 80 to 90% of my companies, nothing to change to the dividend safety. Yeah, most of them, they have healthy payout ratios. So yeah, I don't expect really a lot there, Derek.
Yeah, I agree. I agree a whole lot here, because I think it is too much of a gamble. I know the market was spooked, and some of the companies dropped way more than others. And whether it's justified or not, I think it's way too early to say. Like Nike, for example, yesterday it was all doom and gloom because Vietnam is getting charged huge tariffs. That's where 50% of their trade is. Their dividend is not safe, and now all of a sudden Vietnam want to join in the tariffs, and they jump back up again. So I think until all this settles down, I think just stepping aside and just watching it for a little bit and waiting for it to settle. I mean, if you want to buy Nike for the long term, what's the difference in buying them at 57 And if they jump up to say 65,
Yeah.
I mean, there's no difference. You can just wait for the dust to settle and you can get in at a later point. So I think that's what I will be doing. I'm treating it more as a temporary headwind, but I'm also just sitting back and just letting it happen. I had the urge to buy so much stuff yesterday, but I didn't.
Yeah. Yeah, but it also depends on what levers these companies can pull, right?
Yeah.
This can like just pass on the costs to the US citizens. That's one. But look, Nike also sells in Europe. Is
Yeah.
Europe charging tariffs to Vietnam? Not. Does it therefore mean anything if they ship it directly from Vietnam to, I don't know, a legal subsidiary in Europe?
Yeah.
Aren't they then just avoiding those tariffs? Yeah. So I don't know exactly how that works, but we'll quickly find out
Exactly.
with this.
Exactly.
Yeah.
Yeah. Yeah. And that's why I think being calm in this situation and not diving head first in, just waiting to see how this will play out. Because you mentioned what Trump thinks or what he thinks is fair, and it's probably fair to say nobody can tell what's going on in that man's head.
Exactly.
So
Exactly.
let's sit back and wait. Philippe has asked if you are or will be selling anything given the recent developments, or to put it differently, is your conviction still intact for the companies in your portfolio?
Yeah, I will not be anything selling. If anything, I could take something like Viatris, which was already on my sell list anyway, and just use it maybe for tax harvesting some of the Apple gains that I had, and then redeploy the money elsewhere in a stock that is appealing right now with a similar yield.
Yeah, that's a company you're going to sell anyway, so it's not really
exactly. It's not because of this. It's already on the sell list anyway. I just didn't. I've just been procrastinating on this one. Yeah.
I get you. I don't see myself selling anything based on. I think it would be just panic selling right now if I was to do that.
Yeah.
Because I have no clue what the long-term effect
But
would be.
that only when there will be a dividend cut. And I can imagine that there are some companies here that are already under debt that think like never waste a good crisis.
Yeah.
If we had a chance to reset the dividend, then it's now. Yeah. But yeah, I don't really have them in my portfolio, I think. So
Yeah. It'll be interesting when we hear the guidance in the next.
the guidance, that's what I'm looking for, to hear what CEOs see, because the CEOs now, they know exactly what the data is telling them. They can see how the orders are going. Maybe also companies have like master good first quarterly earnings because they've been building up inventory. Yeah, because they knew that the tariffs are coming. So maybe they build up a shitload of inventory, which means that the free cash flows for those companies will look really poor. Yeah. But then next quarter, they can sell it out and the free cash flow will be skyrocketing. Yeah. And then we have a quarter. Then you are like already half a year in the year to see like if the tariffs are really coming into effect or not.
Yeah. I think the next 3 months will be key. Now, look, we don't know how this will play out. A lot of people might negotiate a lot earlier than this, so it might not even affect companies that much. Who knows? Who knows how this will play out?
We need to see the readouts from the companies.
Medred has asked us about stocks in a portfolio that you think will cut its dividend as the result of this tariff.
I really don't know. I mean, I haven't even given it a thought. So Meerdad is asking something that, I mean, I'm looking at my portfolio. ASR Netherlands.
No.
I mean, that they get their revenue from the Netherlands. And then Group. Hershey, would they cut the dividend? Nah. Microsoft? Nah. Shell? No. Ahold Delhaize? No. APFI? No. Unilever? I don't think so. ExxonMobil? No. Johnson Johnson? No. Danone? They just hiked it. We have a year to learn that. Legal & General? No. Munich Re? No. So, I mean, I'm now talking about my larger positions, which is already probably half my portfolio. So the other half, it's already much less impact. So
yeah,
I'm not worried.
Exactly. Yeah. I'm similar. Top top half of my portfolio. It's not actually overly US based. ASR, Agree Realty,
Mhm.
probably not. Fiji Properties. Everybody's still going to go to Vegas. Everyone loves Vegas. British American Tobacco, Legal General. I think I'm okay. The only company I could see maybe is Target. Target might have a chance because I know they're under pressure with margins and
Yeah, but come on, Dividend King with 50 years. Come on. And
yeah.
what do we mean with pressure?
Yeah. I mean, look, this is with a gun to my head trying to pick one in my portfolio.
Okay.
But that's probably the only one that I would give a chance to.
Yeah. Well, I don't see it for Target, honestly. They have a 50% or 45% payout ratio.
Yeah, they're okay. Billy has asked us if America is really going away from the Reagan free trade and free markets equal freedom approach in favor of massive tariffs, what sectors do you think will do well, and what type of companies will do well and will be able to sustain and grow their dividends?
Well, let's say companies with a lot of local revenues. We just said ASR Netherlands. It just sells mostly in the Netherlands. So I think a lot of companies that have a lot of domestic sales will do well, whether it's America, Netherlands, Germany, domestic sales, they will do really well. And there are some companies like that. Hershey produces sells mostly in America, yeah, not in Europe. So I think those sectors that will do well. I think the real estate investment trusts. I think they sell, of course, also. I said in America, and if tariffs go up and it hits inflation, you can expect lower interest rates. So real estate investment trust may be very interesting from that point of view. I think that's the sector that will probably have the opportunity to do the best.
Yeah, keeping it local. I suppose in Europe, we're quite lucky in Europe actually. There's a lot of local. I think the UK is quite a bit as well, but ASR, you've mentioned that, NN Group, all those type of companies. Anything basically.
Iberdrola, although Iberdrola has a bit in the States, but it's
Not
kind of
much.
energy.
Yeah,
Exactly.
all these companies we were buying for global diversification are the ones that will screw us over because that's where the tariffs. That's where the tariffs come in.
Yeah, I saw a tweet the other day. Someone saying like, "Oh, I'm so looking forward for I said Americans to what was it to package my shoes and like and to I don't know like all this crappy stuff that is coming from China to have Americans doing that again. Can you envision that all this shit work will be done in America again? Of course not.
No. Of course, look, there's a lot of money. There's a lot of money at stake here across the whole world. So I'm sure there will be agreements. Not everybody might agree, but I think the big hitters will agree eventually.
Exactly.
Philippe has asked us, do you find this crash similar or different to COVID?
No, not at all. With COVID, there was this big scare of will the world ever be the same again? I remember there were not even cars in the street, anything. And it was an external thing that we had no control over. This one is self-inflicted. Yeah, if Trump tomorrow says, "Okay, forget it, I had a hangover, and why did you all take me serious?" and it was just an April Fool's joke, then the market will be responding again. Yes, so this is much more self-inflicted. And the great financial crisis that I vividly remember, the COVID crisis that I vividly remember, those were all external, and we had totally no clue. Not that we have much more of a clue now, but now at least we know where it comes from, that it's self-inflicted and it can be easily changed. And that's for me the big difference between them.
Yeah, I agree. One is due to some crazy man's ideas in his head, and one was actually caused by medical conditions. So, yeah, I don't think they're the same. And maybe there's a method to the madness, and he might get the market to boom at some point. Because I remember back in was it November, October, he was criticizing the Biden regime saying the stock market was crashing and it was their fault. So he clearly puts a lot of weight in the stock market and how it performs.
Yeah.
And, I've seen another tweet. I don't know how true it is, but since his inauguration, it's been the worst returns in the stock market of any president.
But you don't know. Maybe they're just shorting the market and they're using this to quickly get rich. And then they say, okay, now it's done. And now we go all long again. Who knows?
Speaking of ethics, like if you're within, not even in his inner circle, but like his outer circle, and you're in his meetings, you're listening to him.
Yeah, you would be buying puts on the Nasdaq.
Yeah, you'd be just puts. You'd be ringing up everyone. No, buy puts on this, buy puts on this.
Exactly.
Don't
Go. Yeah.
Don't tell him I told you, please.
Exactly. Yeah.
Manny Mystery has come in with a question. Considering the tariffs will increase the cost for companies, what sectors do you think will be more successful in absorbing those costs and limit the impact of passing them on to customers?
Yeah, these are of course those products that have pricing power. So I think we spoke last week about Ferrari.
Yeah.
Louis Vuitton. I think those will definitely be able to just pass them on to consumers. So the luxury products. But of course, if there's a recession, they will be overall hit as well because people will be more cost conscious. I still think like cloud providers and such. Like think about if we get these tariffs also on American companies. I think that, if you as a company use Microsoft products and they suddenly become 20% more expensive due to tariffs, even though it's a large bill, they are so integrated, you just can't stop with it. Yeah. Same with SAP. You imagine you're an American company, you have SAP. You can't just say like, okay, I will turn it off. Your invoices stop and you go bankrupt.
Yeah. It's a tough one. And then the second part of his question is, do you agree for dividend growth investing that because of all these tariffs, we need to select a lower payout ratio of free cash flow with companies which are also highly operationally gearing businesses? So they have fixed costs, larger percentage of the variable costs.
Yeah, but I would generally already recommend that anyway. Secondly, yes, but there's a lot of speculation with all of this because it assumes that the tariffs are there to stay, which I actually don't know. At this, I would like to see where we are half a year from now. Yeah, because I do think if you have a bunch of like Trump's policies so far have been always very different and nothing shy of, let's say, diplomacy. So I mean to say, like, let's see where they are in half a year. But don't forget that if costs go up, that the Fed may throw the interest rates lower, and then your gearing eases also a bit up again with the debt servicing that you need to do. And isn't that what Trump has also always been looking at? Because how many trillions they need to repay this year and reissue? I mean, if they can drop the interest rates, it's a lot of savings to the American debt pile.
I mean, is this the end game? Is this the gamble that he's taken by putting everybody else on notice? But his actual end game, he doesn't care about the tariffs. He just wants them interest rates to be lower so they can because he spoke about this financial burden for a long time, and we know that that's his primary goal.
If that's the case, then he would be very altruistic for the American society.
Yeah, but I mean, it could be the end game with him. I don't know because it just seems this Liberation Day was all very theatrical and stuff. But there has to be a reason. Like, you're not just going to attack every country in the world.
I mean, I just feel like we're living in the Twilight Zone. I mean, calling that Liberation Day. I mean, what kind of spin doctor do you have? Yeah, but come on. If this would be any other president from any other country, imagine how the world, imagine how America would have responded as well, right? So
Oh, yeah,
yeah, but it was rather liquidation day instead of liberation
yeah,
day.
yeah. But he's speaking to an American audience. They are not a worldwide
Exactly.
audience. So
Yeah, and he should have an American first. I expect our politicians also to be country first, right? That's why you're there. You're voted by your people, not by the people abroad. So
yeah. The second question from Annie is around interviewing Donald Trump. And if you had one question that you could ask, what would it be?
oof, you go first.
I would ask him exactly that. What's his goal out of these tariffs? What is he expecting to achieve from them? That's really what I would want to know. Behind, not in front of cameras, like
Yeah.
so. I don't want any spin. I want the actual know the truth. Why would you do something as crazy as this? And what's the end game? I would really love to know what his end game is, because I don't
Okay.
believe it's fair trade. I think it's something bigger.
I would probably want to ask more a question like, knowing that you're kind of in the last mile of your life, yeah, and you're the president, what motivates you? What really still motivates you, and what drives you, or what is your goal really? Yeah, because you're kind of like, okay, kind of like you either die and re-election according to the constitution is not possible. I know that he will go for third term. Let's assume it's a second term, so he has 3-4 years. Like, what really drives him and motivates him? I would like to know that.
Yeah.
Is there something altruistic in him that he wants to leave something behind in the history books? And I'm not talking about what we're seeing all now, because that may be totally different than what plays in his mind. And I
Yeah.
would like to get a picture of his mind, that he feels like, I want to be the one that kind of changed America again, because we were at a gliding scale where the wealth gap was increasing, and I triggered the return to a closing wealth gap by avoiding a wars, or something like that.
Yeah.
And yes, I've done it with tariffs, I've done it with this, all very non-controversial or uncontroversial, but others have tried it and it was just only increasing. So or maybe he just says like, I love this country and I just want it to be good for everyone. I'm really curious to get a feeling of what he really thinks.
That would be interesting. Like, is he just on an ego trip and trying to get into the history books, or does he genuinely believe in Make America Great Again, and he's trying to really do that? I mean, it's hard to know because of what he says with stuff and his answers, and it's hard to get a sense of it. And I know there's supporters in America of him, and they'll follow everything he says. But as an outsider looking in, it's hard to take what he says serious, because he doesn't answer with serious answers. I mean, you ask him about the stock market crash, and he says it's a beautiful thing.
Yeah.
Come on. I mean, who are you kidding here? Like, it's not a beautiful thing. Answer the question straight.
So I'm not interested whether what he does will result in what he desires. I would like to just...
What's he thinking behind it?
I just would like to understand what he desires. And then, whether the actions contribute to that is something else. But just really like, what motivates him? I would be very interested to get a view in his mind.
Okay, that could be a dangerous place. Mayak has asked us a question not related to tariffs. So, how do you look at dividend initiators? Every dividend story has to start somewhere. So, how do you approach such companies? He's been researching Booking Holdings, and he really likes the business. After hiking the dividend by 10% this year, they joined the honorable club of dividend growth companies.
Yeah, I like dividend initiators a lot, actually. I'm always keeping an eye on them. Typically, they're still a little bit on the low yield side.
Yeah.
But generally, I really like them. And I mean, look at, we are now often investing in blue chip companies that are doing the dividends for 20 or 30 years. They were probably really growing in the 80s and the 90s. But the Googles of this world, or the Microsoft of this world, that initiated a dividend maybe 20 years ago or 10 years at Starbucks, those may be the ones that have a dividend that are the next dividend kings in the future. Yes.
Yes.
So that's why dividend initiators are very, very interesting for me.
Yeah, I agree. I don't look at them as much as you do, but I do think it's good when they start with a dividend. But the thing is, you know that the growth story is nearly behind them when they start initiating a dividend. So you look at something like Book and Holding. I don't know the business too well, but you would say whatever growth that they had, it's probably going to slow down now, and they're paying back us
Yeah,
shareholders.
but that was how Target was also at a certain moment started when they paid a dividend, and all your other companies in your portfolio. It wasn't like when they were founded, that the CEO says like, on day one from founding, I'm going to pay a quarterly dividend.
Yeah, true. Some companies might, but
Yeah.
no.
So imagine buying, let's say McDonald's 40 years ago. I don't know when they initiated dividend, but let's say 40 or 50 years ago. Imagine buying then. How would you have performed?
Incredible.
Yeah.
But I think with consumer staples, it might be a little bit different than, I don't know, is Book and Holding. Do you know what they do?
Isn't it booking.com?
Well, that's what I'm thinking.
Yeah.
So I'm thinking a consumer staple in terms of initiating a dividend, you expect that to be steady and long term. Where something like Booking.com coming from, I'm just assuming, I don't know what the
Yeah, but now
was.
we're talking about the type of business.
Exactly.
Yeah.
And I think the type of business interests me more in terms of dividend initiators than just flat out dividend
Yeah, exactly.
initiators.
Yeah.
That was my point, my long-winded point. We got a question from Ikrivi. What is your opinion on Nike since the drop? They depend a lot on Asia for products. Do you see this as a major
Yeah, we just
problem?
spoke about it. Look, they have only a profit margin of 10% on average, Nike, I believe. So if that's the case, and for instance, the cost would increase, and let's say it's a 2% increase in overall cost of goods sold, let's say, and such, and let's assume therefore the profit becomes an 8% margin. You're talking about a 20% drop in earnings, which is a lot, right? If you have a company that has an 80% margin, I don't know, Visa, and they drop 2% because of 2% higher costs, you're talking about, what is it? Not even a 3% drop in earnings. So yeah, the lower margin businesses, they will be probably hit hardest by this due to the fixed cost that will go up.
Yeah.
And that's, I think, why Nike is being repriced at the moment.
Yeah, I think so. And I think a lot will depend on Vietnam's willingness and that area willingness to negotiate with Trump. I mean, if you're going to be hit with huge tariffs, it could affect them for potentially 3 years while Trump is in charge. It'll change after that, but 3 years can do a lot of damage to that balance sheet. So let's see.
Well, Nike can always start manufacturing plants in Russia, because Russia is one of the only countries together with Belarus that were not on the tariff list.
They could do that. I don't think they will, but let's see. Mahedred has asked us to name one usually super high flying stock that you are hoping to come within your buy range.
Wolters Kluwer.
Wolters Kluwer. I'd like Visa. Visa is one I really like. Conor McCarthy, what moves are you both making now that 4.1 trillion has been wiped off of shareholder value?
Nothing specific. Really nothing. I'll see next week again what I'll do.
Yeah, just keeping calm and watching and waiting. And
I'm buying something as soon as I get money on my account. I buy some stuff, but I just mentioned what I've been all buying in Q1, so expect more of that.
Yeah, I'll tell you what I did. I saw HPQ drop quite more than most of the market. I think around 13%, around dropped to around $23. I sold 2 puts on them. I made $400 quite quickly. It was like, I'll take that, thank you. That's what I did. But in terms of buying companies, do you know what? I think it's just still too early to just dive headfirst in. It seems very risky, and look, there could be huge rewards, and I could get it right. I could pick the one company that will rebound, but I might not. So
yeah,
I don't need to rush. I'll just invest every month and see where it takes me. And the second question from Connor is: how can anyone determine what is most exposed to this nuclear blast?
Yeah, it's a bit harder here, but I think we spoke about it already. So companies that have really complex supply chains depend on many and international supply chains. I think they're the hit the hardest. Yeah.
Yeah, I get you. Tim has asked us about Atlas Copco. So far, he thinks they have good fundamentals, good dividend stats. They have a high return on invested capital, 22%. Return on capital employed is 28% over the past 5 years. Do you have any thoughts on this business?
No, not really. But I like a suggestion of making it a stock card. It's not anymore possible for this weekend, but let's add it to the list, Derek.
Yeah, it's a Swedish. Yeah, it's probably right up your street. It's a Swedish company that manufactures industrial tools and equipment. So probably a competitor to Stanley Black and Decker and so, but European based. So might be interesting to take a look at. Centrino said, "Which sectors are you buying during these red days?"
Nothing really. Like I mentioned.
We're so boring. Joe, that's why we're dividend growth investors. Too boring sods. That's what we
Yeah.
are. RMS has said Siemens is below 200. Are you buying or waiting? I know you can't answer directly, but a more general question. Buy more expensive now or take the opportunity and buy a sector like tech or luxury?
I haven't made up my mind yet what I will be buying next time. I need to think a little bit deeper about it and effectively answer this question. Do I want to go a bit more defensive or a little bit more offensive now as well? Yeah, because there are stocks that, like LVMH, I have only, I think, one share in my portfolio.
Yeah.
I bought it at the time for 670 euro. Now the company is trading at 500 euro. I'm 21% in the minus. I have one share. It's my lowest position. The yield is now 2.45%. Is now the time to buy some more LVMH?
Yeah. I think my natural recourse here is to be more defensive. That's my natural
But I've been
reaction.
defensive all the time because the defensive stocks were typically the ones that were still offering a decent yield at all-time highs. So I'm wondering, should I continue deploying some cash into all those holdings that I was anyway buying at higher prices, or should I now take the opportunity of companies where I said always like, too expensive, too low yield?
Yeah, it's a conundrum.
Yeah, I think the second one, because I've been for 3-4 years talking about that. So I'm probably much more keen on, and I haven't made up my mind yet, but to look into LVMH, high quality company, maybe some Novo Nordisk at these prices, companies that I have just very little exposure to my portfolio and that I always wanted to have more of.
Yeah, and it's with a long-term mindset as well. This is not something that you're going to.
Oh yeah. Long
If you're
time.
thinking for the long term, it might make more sense to go after that. I just know I just know myself when we have big things like that, I see a lot of panic. There's a lot of people panicking already, and I just like to relax and just wait and see. I thought COVID was different.
Yeah.
I had a lot more money to deploy, but I didn't think it would last forever and it would settle out. Whereas with this,
Yeah.
I don't know how long it could potentially last 3 years. We don't know how long this is going to last. So
Yeah.
I'll wait and see how things play out over the next couple of weeks before I make any decision. So, but defensive, I'd probably stick more European, as you said, local based companies for this quarter and then see how it plays out. Dividend Dad, what are your thoughts on getting dividends only, or dividends? What are your thoughts on getting dividends only certain months of the year? My portfolio has dividends, but 40% of my yearly dividends comes in March and June.
So I prefer to have it a bit more spread out, but I'm not making it part of my investment decisions.
Yeah.
If you know what I mean, because I know I have the discipline that I can collect money and spread it out over the months. I know this, so I'm not too concerned about it. But I do know, for instance, that some months are just really weak. For me, January, October, January, February, October, and November are very poor months. So yes, if I could get some shares, most likely American shares that can pay me some more dividends in those months, yeah, that would be nice. But I've discipline enough to, take my dividends in April, May, or March, April, May, June, September, and August when it really peaks, and just spread them out.
Yeah. Yeah, I think it's too early in my investing career to worry about that. I'm not living off dividends. But I wonder when you do get to retirement, would this be something more in your mind? I know you're saying you're disciplined, but let's just say it's in February and
Yeah.
and you're waiting until March or June for that big bump. So it
I don't
might,
know. Probably I will just retire with, I don't know, 10,000 on the account,
yeah,
and I live off that, and I refill it with the dividends coming in.
yeah. It's just something to think about when you
Yeah.
get close to that, or you can just buy real income, and get monthly dividends.
Yeah,
Easy.
but maybe one of the listeners that is already retired that has this thing, maybe they can tell us how they are doing that. So if you're listening, maybe on Facebook you could drop a note, maybe Ron, who is already early retired, or one of the other lads, and just let us know how it works for them in practice. I will
Yeah,
be keen to learn more.
100%. I mean, if I think rationally about it, I like having a fixed amount. I like knowing, because my main costs are generally fixed. There's
Yeah.
some variable. My main costs are generally fixed. So if my dividends were enough to cover those, I have no problem. I
Yeah.
could certainly then say, sorry, if my dividends in the off-season months were enough to cover those, I'd
Mhm.
be happy. And then March and June would be my luxury spending, let's say.
Yeah.
But I think I would like to have an even amount each month. I think I would.
Yeah.
Wolf has asked us a question. I'm going to ask you, because we have a very nice newsletter coming up this week around pharma stocks. I looked at Merck, and you've done a lot of heavy lifting looking at 15. Is it 15 other
Yeah,
companies?
I
15,
compared 15 stocks.
15
15.
stocks.
Yeah.
So, question: Novo Nordisk or Johnson & Johnson? Which one do you prefer?
Yeah, I think I just mentioned Novo Nordisk, but it's more because I've got already tons of Johnson & Johnson.
Yeah, but forget that. Forget what you own.
I
Which
would
one would
go
you?
for Johnson & Johnson because they have a more diversified pipeline.
Yeah, and a better balance sheet.
AAA balance sheet, yeah.
Yeah.
Novo Nordisk ticks also kind of all the boxes, but you're depending a lot on weight loss. But like we mentioned 2 shows ago, like they have an unlimited supply of customers. So I'm not too worried about that as well. And the total addressable market is so rapidly growing that even if they would lose market share, which they aren't really doing, but let's assume they're still, how do you say that? A rising tide lifts all boats.
Yeah, a rising tide lifts all boats.
Yeah,
Yeah.
exactly.
Yeah, I think I would choose Johnson and Johnson. Their portfolio's a little bit stronger, but I also said balance sheet is much stronger too. So that would be my pick. But why not have both? Split between the two of them. I mean, they have the same 4 PE, forward EBITDA ratios. I mean, valuation could be quite close in both. So
Yeah. Yeah, if Johnson, you have again the talc powder issue, right? And that could have been, by the way, the news of the week. Now I remember it. Because Johnson, for the third time, I believe, the court
yes,
didn't
yes.
agree with them spinning it off into a new company that they could then declare bankrupt. Yeah.
I remember when this was announced first, and we were criticizing Bayer.
Buyer. Yeah.
And we were saying that they should hire Johnson Johnson's lawyers because they know what they're doing, and they're going to get rid of this talc. And it hasn't been the case, right? And
Yeah.
we've got Johnson and Johnson, a US company, struggling in the
Yeah.
US
Yeah.
with the legal system. So we should have cut Bayer some slack. We should cut him some
Yeah,
slack.
I think it's true. I think they should just have some joint group sessions. Yeah, where the both legal teams can
Like a
sit
think
in a circle
like a think tank.
and yeah, invent everything, and more like counseling group.
Yeah, that's what it would be
Yeah,
more like, banging our heads off the wall. But
yeah,
it just shows how difficult that system is, and this is not going away.
yeah,
I think at this stage you have to forget about this writing off that part of the business, and you have to face up to the fact that it's going to cost money.
Yeah.
So
Yeah, and that needs to be priced in, but I think it is with Johnson & Johnson.
yeah. Perfect. So that's the end of the show. Very tariff heavy show as we expected. There's been a lot going on in the markets this week. I think it's clear we're two boring sods. We're just quite calm about it, not panicking, not selling, not really overly buying at the moment, just waiting to see how it plays out. But as always, I love to hear from the community. I know Facebook has been hopping with all sorts of ideas and suggestions. So it's great to read. So thanks to everyone for the questions. If you're listening this long, thank you. Please like, subscribe, rate, anything that will help the show grow. And we will see you all next week. Remember, both of us at Dividend Talk are not certified financial specialists through formal education. We are just two guys sharing our journey for inspiration and entertainment purposes. Hence, this is not investment advice. Although we do our best, we can't promise that the information discussed is always correct, nor appropriate for you or anybody else. We always recommend that you do your own due diligence and be accountable for your own choices. As we always say, you can't borrow conviction from others. Last but not least, by listening to my podcast, you agree to hold us harmless from any ramifications, financial or otherwise, that occur to you as a result of acting on information provided in this podcast.